Welcome to Module 6B, Credit for the Elderly or the Disabled. By the end of this module, you will identify the purpose and limitations of the credit, understand who is able to claim the credit, be able to recognize a Schedule R and a physician's statement, learn how to calculate the credit for the taxpayer, and know how to record the credit on the Form 1040. In this module, you'll learn about the credit, who qualifies, the physician statement, Schedule R, calculating the credit, reporting on Form 1040, recap, and then we'll end with a knowledge check. So let's talk about the credit. The credit for the elderly or the disabled is a non-refundable tax credit designed to reduce the tax burden for taxpayers who are 65 years of age or older or unable to work due to a disability. The amount of the credit is determined by the taxpayer's filing status, adjusted gross income, and the amount of their non-taxable income. Who qualifies? In order to qualify for this credit, a person must 1. Be a U.S. citizen or resident alien, and either of the following: 65 years or older at the end of the tax year, or under age 65 at the end of the tax year, and all three of the following statements are true. Retired on permanent disability, received taxable disability income for the tax year on January 1st, has not reached the mandatory retirement age, which will be defined later. Publication 4012 provides a decision tree to help determine a taxpayer's eligibility to claim the credit. You can use this decision tree as you're refreshing your training, so feel free to pause the video at any time. Even if the taxpayer meets other requirements for this credit, their income must be below certain levels in order to qualify. If the taxpayer's AGI and non-taxable benefits, including Social Security, are greater than the amount given for their filing status, they cannot take the credit. You can see on this chart here who can claim the credit based on their filing status. Here is an example. Ashley is a single taxpayer and a U.S. citizen. She turned 65 on January 1st and is retired. Ashley has an AGI of $17,000 from interest and dividends and received $12,000 in non-taxable Social Security throughout the year. Can she take the credit? No. Ashley received over $5,000 in non-taxable Social Security benefits during the tax year, so she cannot take the credit. Another example, Nick is head of household and is a U.S. citizen. Nick is retired on permanent and total disability and just turned 61. Nick received $15,000 in non-taxable disability benefits and has an AGI of $2,000 through interest and dividends. Can he take the credit? No. Nick did not receive any taxable disability benefits, so he cannot take the credit. There are a few clues on IRS Form 13614-C, also known as the intake sheet, that relate to this credit. You look at Part 1, Box 4, the date of birth, Part 1, Box 6, which is about total and permanent disability, and Part 3, Boxes 10 and 13, which talk about disability income and Social Security or railroad benefits. So let's talk about the physician statement. If the taxpayer is on disability, they must provide a physician's statement. If the physician determines that the taxpayer is A, disabled, or will be disabled for the year, or B, is permanently disabled, then the taxpayer can take this credit for the tax year if they are otherwise qualified. You can see below an example of the physician statement. The Department of Veterans Affairs can also make a disability determination with the VA Form 21-0172. The IRS does not need a copy of this statement, but it should be kept in the records of the taxpayer as it will be required by the IRS in the event of an audit. This statement is only necessary if the taxpayer was not born before January 1st, 1954. Now let's talk about the Schedule R. Here you can see a copy of the Schedule R. It's a two-sided sheet of paper and covers the credit that we are now talking about. Part 1 of Schedule R, boxes 1 and 2 apply to single or head of household taxpayers. Box 3 through 7 apply to taxpayers that are married filing jointly. Boxes 8 and 9 apply to taxpayers that are married filing separately. Only check the box that applies to the taxpayer in this part. If boxes 1, 3, 7, or 8 did not apply, meaning that the taxpayer is not 65 years or older, then the taxpayer must affirm that they are disabled. If the taxpayer has not already done so, they must get a physician's statement. And finally, part 3, the taxpayer must calculate the amount of their credit. So, how do they go about calculating the credit? The calculation for the credit begins by determining the initial amount of the credit for the taxpayer. You can see by this table the calculations for the credit. The example below provides the calculation for tax year 2019 for James, who is single, under age 65, and on complete disability. His AGI is $11,500. So, how do you report this credit on the Form 1040? The Schedule R form must be attached to the Form 1040. If the credit was calculating using Part 3 of the Schedule R, check Box C on line 54 of the Form 1040 and enter Schedule R in the box, and then enter that credit amount onto line 54. This credit is non-refundable, which means it can only be used to reduce the amount of income tax paid. So, let's recap. The credit for the elderly and the disabled is a non-refundable tax credit that reduces the tax burden on individuals who are over age 65 or on total and permanent disability. If the taxpayer is not over age 65 but is on permanent and total disability, they will need to procure a physician's statement. In order to claim this credit, the taxpayer must fill out Schedule R. This form will determine the taxpayer's eligibility for the credit and allow the taxpayer to calculate their credit amount in Part 3. Once the taxpayer has completed Schedule R, this form must be attached to Form 1040 in order to claim the credit. So, here are some additional resources: IRS Publication 524, the IRS Instructions for Schedule R, Publication 4012, Publication 17, Publication 554, and up next, Module C, Retirement Savers Credit.